go over any questions you guys had with harmonics, you know. Feel free to ask anything. Like consider it like an AMA for harmonics, you know. You guys have anything you want to go over in detail, or even you know, start off with something easy?
Yeah, man. You know, we started the study group, right, for like harmonics. So we've only done the first and second chapter, which means we've just you were there, but I'm not sure if you were able to listen. But
Yeah, I listened to the whole thing, man. It was you know, I need to read volume one.
how the hell did you learn,
Skipped
man?
volume one, went straight to volume two.
Okay, okay.
Smart ass, dude.
Yeah, a nerd.
Smart ass kid.
Yeah,
So I don't know if
so
you guys have questions, anything you want me to lead off with, let me know. Feel free, like, just shoot away. I have 1 hour, so like between 12 and 1, I'm good.
what about just introducing us to the most basic and most common harmonics?
Yeah, for sure. Okay, so
So I don't know how advanced everyone is in this group right now, but a couple people are starting to get into the book because of you, right? So we haven't gone over the tools yet. So if you want to just show briefly like how you measure with the retracement tool just to check your fibs and how you do the measurements for some basic patterns, maybe just
yeah,
introduce
for
us to
sure, man.
like the most basic patterns that recur over and over in crypto according to
Yeah.
your experience.
So this year, the most common pattern is the bullish bat. Traditionally, the Gartley is the epitome of harmonics. Like if you nail a daily Gartley, this is like the chupacabra. This is the ultimate pattern. Um, if you get it on a daily or weekly, these tend to play out, and they tend to reverse heavy. So Gartley would be a shallower retrace, has the same profile like this one. So you see how the A is above the C and the X is below the D. It's exact same profile like this, except the retracement where it closes here, the price would be a little bit higher. So people are buying in a little sooner than here, which on a bullish bat, the retracement goes a little bit deeper. Um, this is right now I find the most common pattern. This one and the shark. So I guess I'll go over the characteristics of this one, and then we can go over the shark next. So the first thing, bullish bat, you'll have this stance. So just imagine, you know, up the pitch of a roof and it's sloping down and the water is just running off, right? So A to C, you have that runoff facing down. So that's the first characteristic on a bat. The next one is your X to D. This one's sloping up. So this is like an on-ramp. Say someone need wheelchair access, sloping up. So down and up. And that's always going to be the way the retracements work out on a bat. Now the way it automatically it automatically generates the fibs, so exactly how much it retraced the main move. But if you wanted to measure it on your own, all you would do is you would click into the third item or third icon and then hit the fib retracement. And then typically typically always a rule of thumb with fib retracement, you're going to anchor at the bottom or whichever point the first wave begins, which is X. So again, B is the starting point of the second wave, which is B to C to D. X is where the entire wave starts, so X to A to B. So you always anchor where it opens. If it was like this and it was the inverse, so like a bearish version of the same thing, you would anchor the same way. It opens here at X, so you would anchor from X to A. So irrespective of whether it starts here and goes up or it starts up here and goes down, always start with the first point. Then I'll left click there and drag always left to right across to where your high point is on the first wave. So in this case, the first wave basically runs X to A. So if you anchored where it opened here at X, that's your 100% of the move. And then your 0 is your origin point A. Because what we're doing with the fib retracement now, we're measuring the retracement, not the actual wave. The wave is measured purely in price. What was the price increase? Basically, from here to here, it went up 47%. If SHIB did that, but it only goes down, so it didn't. But the point is, the wave itself is measured by price action. The FIB tool measures the retracement of that move. So that's the first key takeaway with FIB retracement. So the other thing is whether it's whether it's a bearish pattern like this. So this is just the inverse of the same bat, or it's the bullish version. Wherever you anchor, that's always your 100%. So see, I anchor where the wave opens on the bearish version here. That's 100%. Here's where it opens on the bullish version. That's 100%. Either way you anchor with that first move. So I hope that makes sense. Then the next thing you're going to do, you're going to actually see where the B point completes. And the way to envision this is take a path tool. That's your main wave. Here's your retracement. All this is a combination of swing highs and swing lows. So this is your starting point, your origin, where the wave opens. Sorry, let's call it where the wave begins. And it moves to here. That's your swing high. And the idea is your swing high is a pivot point. So it'll reverse direction at that exact moment, swing high. And then the price action goes down, and then it hits your B. And then again, this is a pivot point, and then it swings upwards. So this is your swing low. So from X to A is your swing high, A to B is your swing low, and then it moves to C. And then again, this would be like a swing high, and that's a swing low. So that's the other thing to keep in mind. So from X to A is your wave, and then A to B is your retracement. We locked or we anchored here where the wave opened at X, and we locked it at the origin point of the retracement, 0% at A. Then from A to B, basically this move, your retracement was 50%. And that's the beauty of the retracement tool. It'll basically have all your percentages. I changed this. I think it's normally numeric, but I use percentages. It just looks cleaner to me. All you do is you double click on the fib retracement that you've plotted, and then you have your basically you can change your coordinates, your styling, everything. So what I do is I highlight these main fibs. These are the ones that are most important. So 0, that's always your origin point. 1 or 100% is basically the end of your wave. 382 is a very important pivot point in the retracement. 618, again, it's basically 61.8%. 886, it's another deep retracement that you need plotted on your fib. 786, that's the Gartley, so that's another important one. 50, you just want to know what the midway point of any wave would be, so keep the 50 on. Then I don't really need this one, the 236, but I have it there anyway, just in case. Could probably even get rid of it in the beginning when you're learning fibs and then add it in as you go. I don't really use it too much. 1618 is important for extensions. So if you want to know if a move is extended beyond 100% of the main wave, typically when they cross a certain threshold, they'll go all the way to the 1618. So that's why we call this our extension. And that's like a very common place where people take profit. You'll see major sell-offs around the 1618. So I keep that one in, and it's very important. For really extended extensions, you'll get the 2618. So it's basically you're adding 1 to the 1618, and then again the 3618, and then you can add the 4618 too if you like. But I typically Most moves don't go to the 4618. Like you'd have to be in an ultra bullish bull market. Fear and greed would be at like 89 for greed. And then sometimes you'll get so extended where the RSI runs into like 95 and you might get to the 4618, but it's not common. So I just kind of cap it at 3618. But to be honest, I don't even need that one. Up to 2618 would be sufficient. If you're just starting, what I would recommend, don't even go to that. Just cap it at the 1618. So if you guys want a screenshot, this would be the ideal um, coordinates for your fib retracement. And the next thing I'll do, I'll just make sure to highlight the important fibs. So this one right here. I want this one to stand out, the 618, just because it's a very important fib. So I'll just made that one yellow to stand out. And I used one color, so I basically just made it all white and changed the background. I made it opaque. So that's it. And that way it's clean, very easy to read. So this is your retracement. Just going back to first move, X to A, B retrace to 50. And that's very characteristic of a bullish bat. So the textbook bullish bat will begin its reversal to C at 50% retracement of the main wave. So just picture it like this. Let's see. So this is your main wave, the blue, and then this is your secondary wave, which is always going to be smaller. Like if you just look at the surface area, this one has a lower high, higher low. The gap between C to D is like far less volatile than A to X or X to A. So in that main wave, you're basically looking at X to A, retracement to B, and then you start move to here. Just replot that. So then you have your second move. And typically a textbook bullish bat will reverse at 50 and then it'll move into the B to C leg. So then your path will just continue here. And what you don't want on basically on any harmonic, they shouldn't reverse right to the A. So like this is kind of a double top. If it just stopped right here, this would be very inorganic. Like for it to just go to there and then D. Now this becomes just a regular M-shaped structure. It's not a proper harmonic. What you want is it to close out before the A. Minimum requirement, you can have it on the C leg. It can go up to the 382. So I left my fib retracement on. This looks very unnatural right now, but technically speaking, this can go right down to just above the 382, and that would be fine. As long as it's below the A, it could go right up to like 95, 96, 97. This would still be a bullish bat. It's just it's not the archetype of a textbook bat, which is more like 886 or around 618 on the C. That would be a more reasonable C leg. Otherwise, it just looks too close to a double top if it's too high. And if it's down here, I mean, then it could be starting another type of crab pattern or something that retraces much lower. So this is
And Hoff,
basically, yes.
I was just gonna say, you showed where to get the fib retracement tool, but I think this pattern was already on your chart, right? So
Mhm.
because you're pointing out the number 863, right? The point 863 there. So
Mhm.
can you show where to get the harmonic pattern that you're drawing so that it will write the 863? The
Where to
tool,
find
the
the
tool,
coordinate?
yeah, just the tool that you're using to draw the pattern.
Oh, yeah, yeah. Sorry about that, man.
Because some people might not have ever used TradingView.
Yeah, yeah, dude, I totally missed that. So when you're going through this icon column 1, 2, 3, 4, 5, 6, this one right here, it's going to be either the XABCD pattern or the cipher pattern. They both print the same thing. Sorry, my screen's a little laggy. So that's your cipher and then your XABCD. So it allows you to, and then again, you could change the way the aesthetic looks. You can make it that, make it very opaque, remove your, you can remove your border, whatever you choose. So it's a nice way to visualize the animal that you associate with the pattern. And the only reason for the names like bullish bat, bullish shark, the only reason is so that you can develop a mnemonic memory and you remember, you associate the bullish bat with the 886 fib. So that's all it is. You're just trying to find a clever way to connect a visualization of the pattern with the fib that you're looking for on the ratio. So I hope that makes sense.
Yeah, so this tool will write that number for you. Like he didn't calculate it out himself. He's looking at the fib retracement, but that tool is very useful for drawing those numbers out. Can you briefly just put it on like real candles, like just draw it on a real set of candles on like maybe BTC or something, just for like the real basic visualization of how you draw it out?
Yeah, absolutely.
Because this is on a blank canvas, right? So
So I just drew this one before starting. I noticed that Kadena had a bit of a pattern forming. I do an 8 hour. It's better. So the main thing with harmonics, there's a 30 candle rule. I use 32, but it doesn't matter, 30, 32. As long as you have minimum 30 candles in whatever time frame you're inspecting or visualizing the pattern, then it's valid. If you only had 16, like let's say I go into a 3 day. So on 3 day, you could see how weird that looks. Like that's very unnatural. So this isn't a proper macro harmonic. This is more of a intraday harmonic pattern where it could be between 4 hour, 8 hour, maybe even up to 12, and then it gets a little bit choppy after 12. So show you guys how I visualize this. So there's a main pattern. This is the main wave structure of Cadena when it was going parabolic. Essentially, it was already going parabolic. Like if I zoom in, this is all parabola. And then it had its first retracement on the parabola, and then it found its natural floor, and then it launched into a ridiculous parabola over here. And then what happens with any parabola when, see, these are all areas of perceived value or perceived overvaluation, right? So right here at A, this would be considered overvaluated. So the average holder of the asset here, where it opened at X, saw a lot more value than they did here at A, naturally because the price was lower. So that's what caused you the dislocation between buys and sell orders, and that's why there was way more buys and that drove the price up. So that's just the natural order of how uh, each asset pricing mechanism works. But the idea is here it opened up at 576 based on where it was within the continuum of its chart at this moment in time right here on October 21st, 24th, 576 was considered undervalued by the participants in the asset. So that's what drove the price up. When it hit A, it felt like it was overextended and people saw way less value. Plus, there was natural profit taking. So the yeah, 333% run up. So I mean, you're crazy to not take profits. You should be taking some of your position off the table because position sizing matters, and you should be paying yourself on the run ups. So the idea is at this point, people thought it was overvalued and then they sold off. Or maybe they didn't think it was overvalued, but they thought it was due for a correction or a retracement. And that's what happened. More people sold and saw it as overvalued at that A point than undervalued and bought in. So that's what drove the price down. It went down 41%. So then it launched into wave two, which extended beyond the A point, as denoted here by the 1284. So basically, from this A to B move, B to C is 128% of this move. So if I just drew that, so that's the measured move of A to B, and then I just drew this line, C, B, and I placed them next to each other, you can see this is about 128% of this in terms of the length. So you verify it that. So all I did, remember, when we're measuring wave structure, we anchor where the wave opens, which is here, A, and we anchor at B, where the wave closes and the retracement begins. So from A, right here, to B, right here, this is our origin point where the retracement begins, and then it runs up 127%, basically 128. Just, it's an alignment issue. So that run up from B to C indicates a different harmonic structure than the bat that we're looking at. Because remember, the bat would close below the A, but above 382. So like there, maybe. So what you do is you basically, all it is just one by one, you're going through all the options this could be, right? Like this is the laborious part of identifying harmonics, but the idea is you'll have basically 20 sheets in front of you, and each harmonic will have a different stance or structure, you know, the A to C being oriented this way, and then your X to D oriented this way. And then the idea is you just narrow it down. So this type of stance I call aggressive. And like it's not in Scott Carney's book or any of them, just it's a way for me to remember this is an aggressive stance, you know. Chest is out, head up, so it's sloping upward, A to C. That's an aggressive stance. And then docile is where you're slouched, your shoulders are down, you're looking weak. That's your A to C. That's a more typical of a bat. So based on this is a bullish shark structure, but to verify, I always look at the retracements just to make sure the ratios add up. So again, the way we plot our pivot points, we always anchor on the swing low. So on the way up, we had this run up. If I zoom in, it's way more obvious. And then you have your retracement. This is your swing low. Here is basically your retest of the swing low, and then it shoots off. So basically, you could either mark this in as your origin. Sorry, I'm just going to get a sip. So this is your origin, where you're going to anchor the first wave, X to A. A is basically a giant wick high. That's your swing high. That's your retracement to B. If I zoom out, you could see this is the wick low, slightly below this candle wick. And then you have your next, basically the opening of your second wave in the bullish shark structure, B to C. And because it goes above A, closer to the coordinate 127, this would be very characteristic of a bullish shark. And the way you would do that, I know Lychee put up a bunch of charts for I haven't seen them personally, but I just know from experience that certain structures will have certain ratios. So this would be a valid bullish shark as low as 113.
And just to make that clear, there's a range printed there between the X and the B on the
Mhm.
bullish shark chart. It says 1.13 to 1.618.
Yeah, like Skyfi said, guys, it's not exact. This is a range. You have to use common sense when trading harmonics. The problem with Scott Carney, he's great. He's a legend. He's the best, but he's very rigid. And the problem is if you're too rigid, you miss moves. Because I've tried to use his ratios exact. Like if I only run off, okay, because this ended up, sorry, let me use the magnet here. By the way, use the magnet when you're plotting coordinates, because then it's very precise. Um, you would look at this and go 1, 2, 8. Closer to 127. This is more of a butterfly, bullish butterfly. But again, it's going to have a different stance. It's going to have a different extension, and it's not the 113 or the 1618. So then therefore it's not a valid bullish shark. But I would argue being in the range is what matters. It's more of this stance, the profile. This is what matters. As long as you're above the 113, you're okay, because that's the minimum requirement. And as long as you're below the 1618 around here, like if you extended beyond it, then it's not valid because it breaks the harmonic ratio. But as long as you're in the range, I don't think you need to be so exact with your ratios. But again, I'm not a purist. I'm just using my own testing. Like whenever I've charted stuff, I've left trades on the table because I was trying to be so specific, and it totally screwed me. Like in the end, it ran up anyway, and it had the reaction it would have had at 113, but because it was slightly below, let's say, or it was like 141, I didn't take the trade, and then it ran up, or sorry, it ran down, and it completed the harmonic, let's say. So I don't follow the ratios the same way, but this looks like structurally you could see the X to A, B to C. Again, he labeled this differently, but you get the idea. It's the same structural wave. And then the final wave, you can see it's a larger wave 2 than the wave 1, just if you look at the surface area, and that's very normal for a shark. But it could also be like a sharp move down. So there's no hard and fast rule either with that, I find. As long as when you retrace, this is the part you have to be very specific about the ratios where it closes. So this extension to to C, this I'm not as careful with or precise. I just like a range here. But on the final close, where the pattern closes here at D, it must be within a certain deviation of 886 or 113. Everyone uses a different tolerance. Most, like Carney uses 3%. He doesn't like to go beyond 3. So basically, if this was 85.6, it would still be valid. But if it went to 84.6, it would be invalid. So this one was substantially less. This was about 4% less, sorry, 6%, 6.2% less than what his minimum tolerance would be. But it still had a reaction. But notice it didn't follow through. So this is why
What if
ratios do matter.
what if you drew it to that lower point just to the right? That's your second circle.
Or
Does
this
that
one,
no,
this one
that
right here.
second circle, yeah. Does that bring it in range?
Yeah, it's closer, right? This is 8.4.
Because the candles meander, a lot. They oscillate up and down while they're going on that leg. So is that a valid point to connect to, or would you invalidate that point for some reason?
Yeah, actually, this one would be more valid. Um, that's the thing.
Because
There's
that then
more
brings us
scientific
into the
way.
pattern range, right? And
Yeah. So the one thing for sure with harmonics, we're always going to we're always going to try to make the harmonic fit. You know what I mean? Like the square key and the circle hole. But the thing is, you want to see an inflection. Like the swing low is what we're looking for. So what Sky said, this point is actually more valid. than where I originally plotted it.
Right. I
So I did
only chose
this.
that because it was a lower low than the previous point. There's no other reason. I wasn't trying to make it fit, just it was a lower low.
And you're right, dude, because I plotted it from here because what I saw was the deep drop testing, like breaking the ice,
And you
basically
probably
on
drew
this window.
support, and you probably had drawn support, also by that point because it looks like a trend. It looks like it's on a trend line, right?
Yeah, exactly. Yeah, so I mean, I
Which
had
would be
this
a
originally.
natural point to assume that that might be bouncing or something, like there's other logics that apply, right? Not just harmonics.
Yeah, exactly. So this is when I plotted it, right? So we didn't have the data from here to here, and I don't think I adjusted because I don't trade Kadena. Like I just plotted it for, I guess, an exercise, thought exercise. But the idea is I plotted it to here just because I already this is the break the ice move, this is the retest, and there's obviously some action. So there was a reaction, but this wasn't enough to constitute a reversal or even assume. See, it continued down. So if you look at the linear structure, it still went down further. So this isn't a swing low yet, right? Because this low is even lower. So SkyFi is 100% right.
Yeah, you never put in a higher low. I mean, a lower high. So
Yeah,
it was just trending down still.
some people would look at this from here if they assume that was the terminal bar where the move closed, the D point. They would say, oh, this reacted 55% almost. So this must be it. This must be where we plot our D. And then the retest, some people would look at that. Again, it's not officially a type 2 reversal. It would have to go to the 618 and then reverse back to the pattern reversal zone. And then you could consider it a type 2 reversal where it tests this completion point here again. So it wouldn't have even been that. It was just a reaction off here. So maybe some people speculated that this was in fact where the pattern reverses because it seemed like an area where it could have been close enough to the 886, but it continued down. So what I should have done is kept following this harmonic all the way to here.
Yeah, or at
And
least
like
follow
Skyfi
the
said,
trend of candles, because again, there wasn't, a higher, again, like a lower high wasn't printed, on for that time frame. But this is an awesome case study, this one,
yeah,
because
man, it
the
really
th-
is.
because the thing about it, can you bring the white piece of paper that you had on top of it, or the chart that you had?
For the shark.
Yeah, that you had just set on top of it. Right, because here's the thing, like, and this is the beauty of, just to bring it all back home, right? Like, why are we doing this? Like, if you rode Cadena up, and then it suddenly had a pullback at A, and you're like, oh man, I didn't get everything that I could get. But then you saw it like a bouncing at B, you might think, okay, maybe we're going to be printing one of these patterns, right? And if it reaches within that range of like that 1, 2, 8, 4, which is in between that range of the chart, then you can start saying, well, we're getting up there. Maybe I should take my profit, or you can start thinking about this stuff, because
Mm-hmm.
when you're starting to see like the first three, ranges printing, or you start to see the pattern printing, then in your mind's eye, whereas everyone else is getting super greedy, right? They're thinking, oh, this thing's gonna moon, it's gonna go forever. You're thinking we could have like a huge retracement, right? Because you're like, the top of this thing looks like this pattern that I've been trading like over and over again. And so we might have this huge retracement, and then I'm gonna get a much better entry. I'm gonna make way more profit if I just take my profit. If I take my profit now, don't think it's gonna moon, you know, and
Yeah,
then
like
re
Sky's saying,
and then
he's made a ton
re-enter.
of money doing this, right? So he looks for those toppy signals, and there's ways of doing it. Like you see deceleration. So the perception, so the way you would identify deceleration is if you bring it down to intraday 4 hours, and you start seeing a lot of wiki behavior here. So right here, you start. I mean, if I move that, you could see a deep wick here. That's kind of like an inverse hammer. Same here, deep wick, and then you start seeing descending price action on the 4 hour. So that could be a sign that this is ready, like it's toppy, it's decelerating. You could see, like if you scale it out even more, you might even see, hold on, you might even see on the hourly even more wicks, and yeah, like you can see
Or even
on the
you have
way up.
that lower high, you know, you have a pretty clear lower high after that kind of, I don't know if that's not a shooting star, is it? Just my screen's a little blurry. That anyway, it's a
No.
long, it's an indecisive wick, right? It's an indecisive candle.
Yeah, and then this is like a retest trying to get above this point. It fails, it comes down more. This is a lower high. Then when you scale in again on the RSI, I know Sky uses this really well, but you can see it's red line. Like it's in an area where it typically red lines. And what happened when it was in that area here last time? So if we just take a vertical line here, and we zoom in, this is where the first major retracement defining the first local top happened, right? So I don't know where the wick ends here, but I'd imagine somewhere there. And then it drops the price 35%. So last time we were redlining in the bullish control zone. There was a price drop, and then it happened again here where we got in the same range, basically here to here. Basically the same range, right? And then what happened immediately after it redlined?
And
It formed the top.
right, and the thing that made this an even better case study is that if you paid attention to the ratios that were in the book, you know, and you at least you stayed within a reasonable range, you could have also understood that there was the potential for a longer point down, right? Like maybe those candles hadn't printed yet, and Hoff just didn't see those future candles yet, so he had to draw the pattern that was in front of him. But if he had been referring to the patterns or he had memorized it from experience, then he could have just thought, you know, done a thought problem in his head. You know, maybe, you know, this is only, you know, 0.82 right now. Maybe it's going to extend to, you know, as far as 0.88, you know, like there might be some deeper retracing. And so you
Yeah,
might, whereas somebody might have bought back in because it wicked down and then it bounced up, like you said, like 20-30%, right? Somebody might have bought back in on that first bounce at like a $14. But anybody using these harmonics, they might have bought back in at like $10, you know, or 9.50 or whatever the heck that wick goes down to, right? The lower low. And so that would have been a much better entry, right? One
yeah.
guy would be in profit right now, and the other guy would be way underwater. And so, you know, that's the whole point of these harmonics and really paying attention to these numbers, and probably why Scott Carney only takes certain trades that match up, you know, perfectly, right? Because it's probably just very select about which ones he chooses. But
Yeah,
crypto
like
is pretty
he's
generous.
very good. Yeah, that's the thing. You have 8,000 coins. If you're tracking, like if you're using a harmonic tracker or you chart them manually and you have basically you store them in a separate file for just harmonics on TradingView, and you have alerts set when they violate key fib ratios, then you get alerted. Like let's say here after the fact, I didn't adjust where my D closed, but I eventually plotted in where the 886 was, which was this line. If basically if it violated the 886, so if this pattern went below this line and you set an alert, then you would know that the next likely area it would close is the 113, because there's two versions of this specific harmonic. There's the shallow retrace, the 886, and then there's the deeper retrace to the 113, which would take you all the way here to 75. Obviously, in a mega bull trend, that would be a full reset going back to when pre-parabola over here. So it's not likely if it's in a mega bull trend and the macro structure of BTC is still up, then it wouldn't go there. So you would, you know, just common sense, you would deduce it's more likely to reject anything past the 886 and reverse around the 886. So now you can kind of pay more attention in this area and set alerts maybe here, right below the 886, but also on the trend line. Like let's say you wick below it. What I'll do every now and then, I'll highlight the trend line and set an alert here, and then just basically save. And now if it's below the trend line that I established going back to here, whenever the price action comes back above it, that alert will be triggered, and I know there's a chance that it did reverse around the 886, and this entire zone is the pattern reversal zone. So like the idea with harmonics, you're just trying to rule out what type of retracement you're working on at D, and whether or not it is in fact a valid harmonic. So you got to create some points where it could be a stop loss, and you basically get out of the trade if you entered it and it violates your minimum requirements. So like for here, is a magnet. Like Sky was saying, this would be the more valid at the 84% because we're just off by like 4.6%, which is valid. Within 5%, I think that's more than valid on a 12-hour structure. Um, so then what I would do, again, this is a giant support zone. So it's a little trickier with Kadena because your local horizontal support box is pretty broad. Like it goes from 574 to 835. So I'd be okay in this area. Like I'm the type, like I don't need tight stop losses. For me, I just need, if I have a support box like this, I would maybe put it right here. So I would have my stop loss just below the horizontal support box because then it violates the 886, which is where this pattern that I've identified should close. And if it violates the support box as well, technically it'll go down to the 113. So you see what I mean? You would be saving from this stop loss, which is a very liberal one, right? This isn't a tight stop loss like a lot of scalpers and day traders use. But if this went down to 275, like we identified, you would save 48%. So it would make sense just so that you're not uh, like a form of risk management would be set a stop loss. I know a lot of big shots like to claim they don't set stop losses, but I mean that's foolish. There's certain scenarios within harmonic pattern trading that you're supposed to put a stop loss because if you don't, you run the risk. Like say this wasn't a support box, say there was no previous support here, and basically this is your 886. That's all you have, and your next area of support was this line right here at 275. If you didn't set a stop loss, once this pattern you identified was invalidated, you would lose like 120%, I bet, on the way down. Like right here is your 886. Oh, sorry, my bad. 65%. Where am I getting 120%? 65% you would save. So that's capital preservation. It's not just, you're not going to win every trade. In fact, I lose a lot with harmonic trades. But the problem is, I mean, the good thing is I always identify where I'm going to get stopped out. And that way, when I lose, it's very minimal. But my wins are big. Every time I win, it tends to be minimum 30%, but usually closer to an average around 55 to 60. Because I'll take 50% retracements, I'll take profit off the table, and then I'll let it ride to the 618. So, like my weighted average for swing trade on a harmonic reversal tends to be around 55%. So that's the idea of understand where the trade is validated. So like the circle here to this 886 point, it's valid. If it falls out here, it's running the risk of being invalid. And if it loses horizontal established support from back in October, right here is your stop loss because this trade is I would erase the harmonic because it's nonsense. It's not a real valid harmonic at that point.
Now,
So
Hoff, I think it might be also important to say like how you decide to get into the trade, right? Like where do you decide to get into the trade? Because you're not just going to buy at the 886 or whatever right when you touch the point, right? You're going to wait for a confirmation or
Yeah, that's a good
a
point, man.
validation? And what does that look like for you?
All right, so
So let's say we tapped D, right? And we're like
this is
literally
actually
on the
good.
point of D. And now what do you think, what are you thinking at point D? Are you thinking I should go all in, or what are you waiting for?
It's a very good point. So let's see what we have here. So patterns tend to repeat because what you get within an asset class, you'll have the same people trading it here as they're trading it here. All they're doing is, like, let's say you're an institution or a hedge fund, you lock into a coin that you understand. So you understand the wave structure and you followed it for a certain length of time. So you're comfortable with how it moves, right? Like you identify, okay, typically you'll get a first wave that'll extend to here. You'll get a 50% retracement with this asset specifically. Then it likes to run to the 113 and then reverse the main wave and then get a deep retracement. So for Kadena, you'll see this next structure on a 4-hour kind of mimic the 12-hour structure. It's just scaled down to intraday. And again, the shape is a little different, but the similarities, you can kind of see it, right? You have a smaller surface area on the main wave, the first wave, and then the second wave is the breadth of the harmonic. So the B to C to D. This is the main part of your structure where the big retracement would happen. The only difference is it's a much deeper retrace because this one went to the 84% retracement of the second wave. This one's already extended below where the harmonic opened at X. It's at the 113. And what do we know about the bullish shark? I mean, here's your bullish shark. Remember, there was two versions. There was the shallow retrace 886 and then deep 113. So what I'm seeing here is a really strong reaction on the 113, as denoted by this. And all that means is if you took a path tool and you started from where X opened the first wave, ran it to C, which is the peak, the pico top of the full wave structure, and then ran it, sorry, I got the magnet on 1 sec. And then you ran it to D. On D, you had your reaction, but D retraced 113% of the main wave. So from X to C, this is, I mean, I'm saying main wave, but what I mean is like the top of the combination of the two waves. So this is your opening of the structure. This is your absolute top, your local top. And then D falls below the X point. It retraces X to C 113% to D. And that is perfectly aligned with the deeper retrace of the shark. And you can see the top part of this structure, A to C, is 1586, which is under the 1618. So it's still valid.
Hey,
Ideally,
sorry,
oh, Redo, what's going on, man?
Soros.
Soros.
But if
Who
you're,
we gonna off next, dude?
no, bro, I want to show you something, but please finish the thing you said, man.
Yeah,
Yeah, we were
yeah,
talking about
let
the
me know.
entry.
Let me know after. I'll just finish this one up here.
Yep.
So like I was saying, guys, the idea behind these, you're trading an asset, learn how that asset moves, right? So for me, earlier in the year was Cello, CELO. Like I studied how it moves for, I don't know, 2 months before I started to properly swing trade it. And then I did for sure over 5 trades. I don't know how many it was total, but I made on every move 30%, 70%, somewhere in between. And the idea was I studied the wave structure and how the participants would get in and out of trades. And I just tried to follow what everyone else was doing, the masses. So this is kind of like a reduced version of the main structure. And again, it had a reaction, a D perfectly. So even if you closed out the D here, which you could have, this might have been, no, that wasn't deep enough. That was C, is almost a 1-for-1 retracement of X. So you couldn't consider that the pattern reversal zone. Right here was perfect at D. And from that point, you have a, to the top, 36% reaction. So again, that's good, but you would expect some profit taking at this point. So what I'll do normally then, I'll take the fib retracement and run it from C to D and mark in my 382. So here's my 382 fib. I'll run it here to here, and this is my minimum requirement for a continuation. Like I'd like to see it go past that for this to be a valid reversal. What you'll find is as it approaches this, participants are going to take profit. Almost always, you'll find that they take profit and send it back to D, which is good. You want that. But what you want at D when it returns is you want to get a strong reaction from there that breaks through the 382. Sometimes it won't return there. It'll just do a
Okay, but Hoff,
retracement.
because we were working on the original pattern first, right? So like if you saw that huge first pattern print out, like you've left a lot of money on the table if you haven't gotten in, at one of these bounces. So would you have gotten in at X, or would you have gotten in at B? Like when would you have decided to get in? Let's say that we weren't in a let's say that Bitcoin wasn't going to hell, right? Like this was just a sideways market. Like let's just set aside bear or bull. But if we were just going in a sideways market and Kadena had been behaving like this, and you saw like a pretty nice pattern print, that big pattern, would you have entered on X and using your fib retracement, expecting it to get around A, or would you have entered in a B after you got confirmation on that diagonal trend line?
That's a good question, man. For me, see, I would have been watching carefully here. What's the reaction here for one, or here, and then here? Because it's basically, it's finding support on the upper bound of this horizontal support box, right? And we identify it because that was the first local top. And then it defined this zone between here to here to here as it chopped around. It defined this as a support zone in the horizontal box. So if you extend it to here, you're finding the same behavior on this side where it's deep wick above the upper bound again. So I guess participants are starting to see, they're feeling comfortable that this might actually hold as support, but there's no confirmation yet, right? So here you have a low, here you have a lower low, still finding support on the upper bound. It has to move, right? So like this is a good reaction. That's the 36% reaction or whatever. But then it returns down, and now you're seeing a higher low over here.
Right.
So there's a combination of things happening right now. So number one, this defined horizontal support box, your upper bound has proven itself. It's not porous. The price action, like if you look at VRA, its pattern reversal zones are disgusting. Like what'll happen, you'll get the immediate reaction. It'll come back to test it. It'll fall a little bit lower, deeper into that support box, get a bit of reaction, and keep testing until the lower bound. And then I find sometimes, actually frequently, it'll fall out of it until it hits another area of perceived value and then catch its move. With this one, it honored the upper bound. The support box didn't even go into the box. It didn't even hit the 886. To me,
And
these
it's right on
elements,
the diagonal trend also,
that's exactly it.
So it
Yeah, that
has
was my next point.
a huge support that it's actually printing. I mean, it obviously broke down with Bitcoin, but that's because the market was weak, right? So
Yeah, man. There's too many confluent factors that would say this is still an ultra bullish uptrend, but I wouldn't jump in here. Like I wouldn't jump in here or here even.
right.
You would miss this move, right? X to A.
You kind of
You could,
sacrificed it for confirmation.
yeah. Because then if I zoom out, this is the 12-hour, right? But here's the daily.
And I'm just saying this because a lot of people haven't thought about, trade strategies before or how they would get in.
Yeah, we get emotional, right? Like we see this start reacting
We
over
want a
here,
FOMO.
and we're like, yeah, jump in, make 30%, let's go. And then this happens, this giant wick, and then you get dumped, right? So this is you're just liquidity for the real pattern traders that identify X here and then A here, because they know that this is the 382 and that there's going to be a lot of sell pressure and profit taking on the reaction here. So the idea is I'll let it come down, retest, and I would wait right up to the support box, but it's already proven to catch more support on this diagonal trend line. So it's honoring, this is like a very preemptive buy-in. It's honoring the diagonal trend support line, which is just above the horizontal support box. So it's very bullish, which is why I would start paying attention and set alerts on this trend line. So I would send, once the price is up here, I know for sure at the 382, there's going to be some profit taking. So what I'll do is queue up my alert on this bar right here, save. So now as it descends back into the retracement of X to A, when it hits here, it'll trigger, assuming that you've aligned your diagonal support correctly, right? And then you want to see how it reacts on the 4-hour along that diagonal line. So what I'll do is zoom in to the intraday. Here it hits. Then I'm watching the 4 hours. So indecision candle, kind of a weak one, another weak candle. Okay, engulfing. A second one higher. Bit of a retracement, higher low on the 4-hour intraday. Another crazy bullish candle. Could be a trick. Like you don't have to jump in right away. Normally these pattern reversal zones, they play. The price action plays in that zone for a little while. But you'll know based on some of your oscillators. Like I'll look at the RSI, I'll look at MACD. Okay, this looks bullish. So I'll look for bullish momentum building, and then I'll look for bearish momentum waning. And then I'll look, how's the price action relative to that? Higher low. Well, it's not divergence, but it's definitely, you could see there's bullish momentum building. So with that, I would start looking into, is there any resistance horizontally? And there is. Like right here, it seems to be getting sell-offs basically from here to here. So now what I'm looking for is there going to be a breakout and retest of this line? Because then I know we flip local
Right.
resistance here, right? So it's like step by step. You have time. Like on harmonics, especially daily patterns that we're plotting are 12 or even 4-hour, you have time. It'll play in that area for a while. And I would start entering this trade here if I saw bullish momentum building or bullish divergence or anything that would indicate sellers are exhausted and that buyers are starting to really start bidding. So this would be my entry closer to a retest on
And
this
then
line.
how would you have determined where to take profit? Because I think we've used your hour, Hoff, but maybe you can just wrap up by showing where would you take profit? If you had entered right there,
Yeah,
how would you have set a take profit zone for that?
yeah, it's a good question. Let me
Because you
go
also
through it
got to get
again.
out of the trade once you're in it, right?
Yeah, that's the most important part, man. Entry and exit. That's what it's all about. So for me, if I'm identifying this, and by the way, with bullish sharks, one of the rules is these tend to retrace to the 50% fib. They like to fall into bullish 5-0 patterns, but at the very minimum, they'll retrace to the 50% fib. So if I go from X, C, which is basically your lowest point, your highest point, and that's your origin at 0%, I look for the 50% right here, and I'll mark that in because that's the most valuable fib on a bullish shark pattern. Oh shit, what did I do? Cancel. Let me just clean that up. Yeah, so I'll mark in first basically from your lowest point within the main harmonic structure and your highest point, my 50% fib here. And then what I'll do is I'll take the intraday harmonic that's running and I'll mark in my 1618, which is the maximum on the shark. So you see here, it can go from A to C. It can be between 113 and 1618. So then I'll take a fib and I'll run my A to B. So I'll lock, the move opens from A, so I'll anchor here and run it down to the B where it reversed. And my 1618 is confluent with
The 0.5.
50% 50. So right here is my profit-taking box.
And
No
remember,
matter
for those
what,
people who are new, like he hasn't seen this last mountain yet. That's just completely in his mind now. This top, and look how it just prints right there. You know.
it's perfect. Like there's universal rules to harmonic pattern trading, and this, look how well it honored it here. This is, for both patterns, this is exactly where people would catch the reversal. And look how perfectly it reversed. If you knew this and you understood how to identify harmonics early in the structure as they're building, you would have saved on the way down 53%. And you could have farmed, like if you put 10,000 in here and you made whatever the run up was, let's say 72% on that. So you'd be at 17,000, let's say, and then you save 53%. So you saved another 8.5 grand on the way down.
Right.
And then you basically re-enter here. You have more tokens. So you
Because
farm tokens.
you can identify the pattern again, and you can repeat the process.
Yeah,
So
exactly, man.
so just to recap, like what we did in the last lesson, like you can identify the trade. Like you didn't have to trade all that first to make a lot of money. You didn't have to trade that mountain. Like let's say you got in late to Kadena, right? You just had to identify the trade using the harmonic, and then you took, like he said, you took your time. You didn't just FOMO in when you touched the trend line, right? Because you could have FOMO'd in and then you would have gotten wicked out or whatever. It would have turned around quickly. You may have even lost money if you entered late while FOMOing, and you would have just been trading emotionally. But instead, you used your fibs, you used the harmonic patterns, you determined an entry point, and you also predetermined an exit point, to take profit. And then you made money, in a far less risky way than most people do, just shooting from the gut. I just wanted to wrap that all up for you.
Yeah, that's it, guys. So entry, invalidation point, or your stop loss. Identify your support. Like I do weekly support. This is from Retta. He showed me it's best to start with weekly support, then I bring it into daily, then 4 hour. And then, so you have your supports, you have your entries, you have your invalidation points. Like if it extends beyond the 1618, then it's violating this structure. So you will likely just have a continuation at that point. So you wouldn't sell here, you would just ride it out. But the idea is to set alerts on the way into it, and on the way down, you're going to set alerts here as well when you are close to reaching critical support over here. And then what I always do on the daily, I'll bring it into the 4 hour just to see how it plays in the area that you expect it to reverse. So entry, exit, so your entry, take profit, stop loss, and setting alerts in both directions as you're, and then, oh, last thing, very important. If basically, let's say this pattern was only here, like you only had this much data, I start cataloging what this pattern could be, right? So I understand this could only run up to here, and then this could be a bat or it could be a crab. Idea is I start plotting my patterns well ahead of closing. This is a little bit obsessive compulsive to do it from the B to C move, but once let's say it,
But that's what Carney means by maintaining the trade, right?
yeah. So I mean,
Because
here's where
you
you
can
would,
take multiple profit zones. You don't have to just choose the ideal for whatever you think it is.
yeah. So like here's where you would start playing the game at which harmonic is printing, because now you basically have two swing highs. So you've defined that it's 1586. So what patterns close out the C point below the 1618, but above the 100%. And then this is a very easy way to basically narrow down which harmonic is potentially printing. Now you're only looking at 2 or 3 potential harmonics, and you only have to track 2 or 3 instead of starting here, and then you have like 8 different versions of harmonics. So it's a better way to play. If you didn't enter here, then you just wait for this to see what the next move is, and then just follow up with it. And then you could have entered here. So anyway, guys, if you have questions, let me know. Put it in the chat notes, and then later today, like around 6, I'll try to answer anything you guys have. All right?
Hey, thanks, Hoff, man. Really appreciate it.
Yeah, brother. Cheers, guys.